The United States government stockpiling Bitcoin, like central banks hold gold. This idea of a strategic Bitcoin reserve is certainly generating debate.
It's a new concept, with potential ramifications for the U.S. financial landscape.
President-elect Trump's support for a hands-off approach to crypto assets is adding fuel to the fire. He's even suggested using seized Bitcoin to start this reserve.
This perceived pro-crypto stance might be contributing to Bitcoin's surge in value since the election.
Senator Cynthia Lummis has proposed a bill outlining a plan to acquire Bitcoin for this reserve. Can you elaborate on the bill's details?
The bill proposes purchasing 200,000 Bitcoins annually until reaching $1 million. Funding would come from Fed bank deposits and gold holdings.
The scale of this is significant. How have financial institutions like the Federal Reserve reacted?
Federal Reserve Chair Jerome Powell has expressed skepticism. The Fed isn't legally allowed to hold Bitcoin. Powell has stated they aren't seeking to change that.
So the decision rests with Congress.
Powell has explicitly said that decisions regarding holding Bitcoin are for Congress to consider.
Despite this, analysts at Barclays predict the Fed would strongly oppose creating such a reserve. What's the basis for this prediction?
The Fed's resistance stems from their view of Bitcoin and other cryptocurrencies. They see them as speculative assets, not viable securities. They prefer to see private sector innovation. In payment technologies, Powell has emphasized their focus on ensuring consumer and banking sector safety, particularly concerning potential negative impacts from interactions between the crypto business and traditional financial institutions.
This difference in perspective between the incoming administration and the Federal Reserve is fascinating.
It highlights the complexities and challenges of integrating cryptocurrencies into the existing financial system.
Let's shift our focus internationally. How has the idea of Bitcoin reserves been received in Europe?
The concept has been widely rejected among European central bank officials. They view Bitcoin as an asset, not a currency, and they're concerned about its volatility.
European Central Bank Chief Supervisor Claudia Bush has even issued warnings about risks associated with the crypto market. What are some of these risks?
Bush has cited concerns about excessive leverage, lack of transparency, and potential conflicts of interest within the crypto market.
Have any other European officials expressed reservations about Bitcoin as a reserve asset?
Belgium's central bank governor Pierre Wunsch sees little appetite for holding Bitcoin reserves. Hungary's governor-designate Mihaly Varga echoes this, primarily due to Bitcoin's volatility.
This contrast between the United States and Europe regarding Bitcoin is striking.
It underscores the global nature of the debate surrounding the role of cryptocurrencies in the future of finance. President-elect Trump's planned appointment suggests there could be more debate on this.
David Sachs, a former PayPal executive, is set for a new position, the White House AI and crypto czar. Pro-crypto consultant Paul Atkins is expected to lead the Securities and Exchange Commission.
These appointments, along with President-elect Trump's stance and the Federal Reserve's skepticism, make for a complex dynamic.
The European Central Bank has completely rejected Bitcoin reserves. They insist that cryptocurrencies are assets, not currencies.
That difference in classification is critical.
The ECB's stance brings up a major point of contention. What is Bitcoin? A currency, a commodity, or something else entirely?
Bitcoin's volatility makes it hard to say for sure. It's not like a traditional currency, and it's not a physical commodity like gold.
This lack of clarity makes the idea of a strategic Bitcoin reserve even more complicated.
If there's no agreement on what Bitcoin is, it's hard to figure out if it's a good reserve asset.
It seems like the future of Bitcoin is unclear, and its potential role in global finance is uncertain.
There are a lot of unknowns, and things are changing all the time. This raises important questions about how feasible a strategic Bitcoin reserve is and the impact it could have.
Will the U.S. government actually create a strategic Bitcoin reserve?
The tension between pro-crypto people and established financial institutions will probably continue. We'll have to see what happens.
Will Bitcoin's volatility stop it from becoming a legitimate reserve asset?
That's a crucial question. If Bitcoin can't become more stable, its usefulness as a reserve asset will stay limited.
Could its value keep going up and change global perceptions?
Bitcoin has defied expectations before. It's possible.
What do you think the future holds for Bitcoin? Could it be widely accepted as a reserve asset, or will its volatility hold it back?
Think about the arguments we've discussed. Form your own opinions about how realistic a strategic Bitcoin reserve is and what it could mean. This is a conversation that's going to keep going.
People who support a strategic Bitcoin reserve say that embracing Bitcoin could give the U.S. a strategic edge in the changing world of global finance.
They see it as a forward-thinking move that puts the U.S. in a leading position in using digital assets. But critics say that that Bitcoin is too volatile to be a reserve asset.
They point to its history of price swings. They argue that it's not stable or reliable enough for a national reserve. Another concern is how it could affect the Federal Reserve's monetary policy.
People against the reserve say that it could weaken the Fed's independence and make it harder for them to manage inflation and interest rates.
There's also the issue of regulation.
The crypto market isn't very regulated right now. Creating a Bitcoin reserve would mean making new regulatory frameworks.
This brings up concerns about market manipulation fraud and the stability of the whole financial system.
The debate about a strategic Bitcoin reserve is complicated and it has many sides.
There are good arguments on both sides. What happens with this debate will have a big impact on the future of finance.
As we move forward, it's important to look at all the different perspectives and carefully think about the potential benefits and risks before we make any decisions.
This is something that deserves our attention and careful thought. It's worth thinking about why someone would even propose a strategic Bitcoin reserve.
People who support it think it could give the U.S. an advantage as the global financial system changes.
They see it as a way for the U.S. to be a leader in using digital assets. But critics say Bitcoin's volatility makes it a bad choice for a reserve asset.
They point to its history of price swings, and they argue that it's not stable or reliable enough to be a national reserve. Another worry is what it could do to the Federal Reserve's monetary policy.
People who are against the reserve say it could weaken the Fed's independence and make it harder to manage inflation and interest rates.
Regulation is another big issue. The crypto market isn't regulated much at all. Setting up a Bitcoin reserve would mean creating new rules and regulations.
That makes people worry about market manipulation, fraud, and whether the financial system would stay stable.
The debate about a strategic Bitcoin reserve is complicated. There are strong arguments on both sides.
And what happens with this debate will affect the future of finance in a big way. We need to look at every angle and think carefully about the pros and cons before any decisions are made. This is something that needs our attention, and we need to think it through carefully.
This conversation about Bitcoin and its place in the financial system is just getting started. It will be interesting to see how this all plays out.
Indeed. Thanks for joining me today for this discussion. It's been fascinating to delve into the intricacies of a strategic Bitcoin reserve and the potential implications for the U.S. and the global financial landscape.
Goodbye, and see you in the next video.